I grew up a middle-class kid.
Hey, what's going on, everybody? Today I have to give a trigger warning to start off the video because I will be talking about a political candidate that is running for office. This is going to be a social commentary video, kind of review what she's got going on. So some of you are automatically going to be offended. Some of you think I shouldn't be discussing things that have to impact our wallets, even though this is a financial channel. Some of you are going to be offended, and that's totally okay. I don't expect you to agree with everything I say. Just like we don't all invest the same way, we also all won't vote the same way, and that's the great thing about this country. I also personally don't care if you're offended by this video. If you're offended by what some random YouTuber that you don't know is putting out, you probably have a lot of problems in your life, and my video is not what's causing all those problems. All right, so let's get started here. It's time for the American people to come together for the greatest threat to our bank accounts, the Kamala Harris tax plan that she is trying to propose. Now, any stock market investor should be very scared of the tax plan that she is proposing to put out. This could potentially be very disastrous for Americans, as we're about to find out. The Kamala tax plan might have you sleeping on the floor instead of on your nice, comfy mattress. It might cause the world economy to collapse. And of course, everything I'm saying, it might be slightly hyperbolic. You might almost say I'm giving out a sensationalized news headline, but nobody in mainstream media does anything like that. So the biggest concern most have is over her treatment of unrealized capital gains. Let's quickly go over what unrealized gains are and why, if you're a dividend lover, this might be really bad news for you. Let's say you bought 50 shares of middle class holdings at $200 per share way back when. But today, the shares of middle class holdings has risen to $350 per share. So that means the current value of those shares is now $17,500. But your original purchase price was only $10,000. Therefore, the unrealized capital gains, because you're still holding on to those shares, is $7,500. Your investment is worth more now than what you originally paid for it. Capital gains in our current tax system are only taxed when the asset is sold. That means no taxes are paid during the holding period. This is the beauty of the stock market. It's what's allowed so many Americans to start from absolutely nothing, buy and hold great companies that continue to grow and not have to give up their hard-earned money to Uncle Sam so he can spend it on stupid things, and any investor can grow rich under this method. It's what's allowed me to go from $0 to over $200,000 in the past 7 years. I want to go over some more scenarios why not taxing unrealized capital gains also gives other benefits. So this includes encouraging long-term investments. Investors are much more likely to hold on to their investments for the long term if they know they won't be taxed on unrealized gains. This can lead to more stable and patient capital just staying in the markets, which is beneficial for companies seeking long-term growth. It also avoids distortions in investment decisions. If unrealized gains were taxed, investors might be forced to sell assets to pay taxes, potentially leading to suboptimal investment decisions and market distortions. Not taxing unrealized gains allows investors to make decisions based on their investment goals rather than just worrying about the tax considerations. It also provides flexibility for investors, right? You can choose when to realize gains based on your own financial situations and tax planning. The control is left up to you. With her tax proposal, the government has all the power on when they're going to tax you. What about reducing complexity? Taxing unrealized gains would introduce significant complexity into the tax system, requiring constant reevaluation of assets and complicated tax reporting. By taxing only realized gains, the system remains relatively simple and more straightforward. Also, let's talk about tax on paper profits. Unrealized gains represent paper profits and can fluctuate with market conditions. Taxing these gains could lead to situations where investors may owe taxes based on temporary increases in asset values that might not be realized in the future. And of course, there's the whole supporting economic growth. By not taxing unrealized gains, capital is encouraged to stay in the market and support business development and innovation. This can contribute to overall economic growth and job creation. Now, I'm sure many of you have heard of the scary two words that people hate to talk about these days that is ruining our entire lives, and that is private equity. What is one of the big problems with private equity? Well, they are quickly buying and disposing of assets just in the hopes of making a quick profit, right? They will buy a company, inject a bunch of money in there, increase headcount, but then they will quickly flip that in less than a couple years, and they will have to lay off all those people. They might drive a lot of companies into bankruptcy just to make a quick buck. And that's why you see a lot of the problems that we have in our society today. And by having her proposed tax plan, that's only going to make this situation much worse. The system has worked quite well, but what genius idea does Kamala have? She has suggested her administration might start taxing unrealized capital gains. I want to emphasize this is an unprecedented move that has never happened in US history. Like, we've had so many stupid people in our, almost 300 years of US history, but this is a new low in stupidity. But much like most of the time when Kamala is asked a basic question on how this tax plan might actually work, she just deflects and mentions that she's from a middle-class family. To be clear, as of today, the current proposal is only targeting those with a net worth of over $100 million to pay the minimum tax on unrealized gains from assets, and this includes stocks, bonds, or privately held companies. So again, guys, this wouldn't really apply to vast majority of Americans, but that's only as of now. Now, you're probably saying, hey, Cody, why are you simping for these super rich people who are all obviously terrible people, and rich people are all bad and they've clearly exploited people to get into the position they are in? And there might be some truth to that, but I want to tell you one thing. Rich people do in fact control a lot of money, and the gap between rich and poor is only getting worse. So to say that only those with less than $100 million net worth won't be impacted indirectly is absolutely ridiculous. We're all gonna feel the impacts of this terrible policy. Now, those who control the most significant shares in a company, those are gonna be rich people. They're gonna be selling strictly for tax purposes now. Imagine the volatility and impact on prices for everyone. This doesn't encourage long-term investment. It's just, hey, how can I make a quick buck and sell? Again, these are the same issues people bring up when they mention private equity and how they're buying everything up, which they are. Notice how everything now seems to be a big chain? You don't see your local mom and pop stores anymore. Everything is just a big corporation in your local neighborhood, which looks exactly like every other local neighborhood at this point. Imagine the impact this will have on your 401k when you're trying to retire. As much as you hate to admit this, who creates jobs? Who promotes innovation in a capitalistic economy? It's often rich people or those with access to capital. The US plays a global game where rich investors will try to flock to other tax haven countries that will not have such absurd tax laws, and they will bring all their dollar bills and resources with them. Also, just because she starts with $100 million today, there's absolutely nothing stopping her from lowering that limit to lower earners in the future. The US for the longest time actually didn't have an income tax. It only permanently was established in 1913, and those income limits and percentages have certainly changed over the years. One thing we can learn from history is that once you give the government power, they will make sure they abuse it in the worst possible way. Also, can we just talk about how the heck are they ever going to enforce this? How are people going to cough up money for money they don't actually have yet? What happens if I pay a tax today, then my investment goes down, as stocks often tend to do? What if they are in the red the following year, but I paid tax the prior year? How does that get trued up? I have a hard time believing the government is going to be giving me my money back when they can barely balance a checkbook. Can Kamala answer any of these questions? No, because she's from a middle-class family. Also, why is the conversation always about how much to tax people? Why don't we ask the bigger question about what the government is doing with our money? How much of our hard-earned taxpayer money do we keep giving away to other countries? To start wars? To do mass atrocities to other human life and the planet? how much of it is actually going to help non-US citizens? We have so many people suffering in our own country. Why don't we try to help them first? Kamala has another idea of taxing 28% on long-term capital gains or assets owned for more than 1 year for those making more than $1 million annually. This is an increase of 20% from today's prices. Now, many of the investments that we own, such as income ETFs, when they're not giving you ROC or return of capital distributions, they're gonna be giving you ordinary income. Do you really want to be paying more taxes on your hard-earned money so the government can spend it on stupid things like themselves? When have rich politicians ever looked out for poor people or the middle class? The rich can find loopholes. They will always hire the best accountants, but middle class people, they will be the ones that get left holding the bag. They will be the ones that get taxed to death. The middle class might be what Kamala once came from, but today she's estimated to be worth more than $8 million. That's like nothing compared to the $6 billion that the orange man is worth. Maybe it's like rich politicians don't know what's best for the average American like you and I. See, now I offended both sides. I accomplished my goal with this video. Let me know what you think about Kamala's genius tax plan in the comments below and how this might impact you as a dividend investor. Again, I don't expect us to agree on everything, but I hope we can have productive conversations because stuff like this really needs to be discussed when we're having a very important election. Make sure you're subscribed. Thank you to all my Patreons, and I'll catch you on the next one.
I was raised as a middle-class kid.